The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, we saw a bit of a rally to close out Monday's trade session across the grains and oil seeds, kind of a mixed day in livestock as well. We're going to talk about it, and we're going to try to make sense of the early week market moves. Joining us now on Market Talk, pleased to talk with John Heimberg from Total Farm Marketing. John, good to catch up with you again here today. And as we kicked off a week, I think a lot of folks went into the weekend looking at spot corn, for instance, putting a 3 handle on and just wondering when would the bleeding stop in these grain markets. Well, a little bit of a turnaround on Monday, some positive things to take into Tuesday's session, but I wonder if it's more of a short covering, slight rally possibly here that could just get sold again. I mean, let's just start with your 1,000-foot picture here. Kind of where these grain markets stand as we wrapped up Monday's session, John.
Yeah, let's kind of enjoy the day at least for once. I mean, for basically since the month of February began, we've been higher 4 days on the front month corn contracts, and 2 of those days were a penny or less. So it just kind of tells you how negative the selling pressure has been through the entire month. Now, fundamentals are still not friendly overall. Okay, we got to still keep that in mind, but it's nice to see some price movement here. I'm a little more concerned that this is going to be a short-term play basically because of the calendar and the way things are than an actual maybe change of philosophy by the funds or wherever. We saw the funds come in last week, Commitment to Traders, 340,000 short contracts, net short contracts, taking out the record from 2019. Obviously, that was done on Tuesday, so they still sold it Wednesday, Thursday, Friday, into that as well. So I'm expecting that number to be kind of still even larger. The biggest thing we've been going through, and it's been a big conversation with a lot of the customers I deal with, they were dealing with basis contracts. And this is a window that they kind of, unfortunately, the market knew they had people. They hung them out to dry in these basis contracts, whether they go price it, at this $4 or lower level or roll them and take that carry on. And it really was very similar to how we ended November with the December contract, the very exact same type of trade-off. And then when we kind of got through that period, the market took off for a couple-day rally. Kind of feels like maybe the same action could be starting here. In November, we picked up 23 cents in 2.5 days. Today, we've already put in 12 off the low on that May contract. So we'll have to see how far this wants to go in that regard. But again, still remember that the fundamentals are still not bullish based on the market here.
Yeah, and that's a great perspective to take here, especially on this core market, John. Like you mentioned, a lot of folks kind of caught at a catch-22 there with basis contracts, and we're getting into the end of the month and first notice days and more, and it's really is a tough conversation right now in terms of folks who are still hanging on to old crop bushels, and some folks might be entering that hang on and hope type of mentality, but hope's not really a marketing strategy, is it? Sometimes, you got to make some tough calls here in windows and markets like this, don't you, John?
Yeah, and it's a tough spot. And I feel for producers that are still here. Obviously, you've had a lot of different mixed signals throughout the course of the year in terms of what this market could be doing. Even now, I still see opinions that are, thinking this market's going to really take off and find footing. And I'm just going to stay with the fundamentals right now and where we are. Look at the U.S. compared to other global prices for corn. The export market has improved, good export inspections today. But we're still looking at a big number going into this. Now, maybe that gets changed down the road. We'll see. And I'm not going to get into the debate over bushels and production and acreage. But right now, here's the number we're working with. And what do we have to do in the short term? If we get a little run in the market, does that give you an opportunity to get some bushels priced? Yes. Get control of those unpriced bushels, whether it's just having a cheap put to put a floor underneath and let the market work if it wants to the upside. Still, it's we're down here. We're at a point, though, you're starting to ask, okay, what's our downside risk? Another 50 cents? 350 window, the bottom of this range from, back in 14, 15, 16, when we dealt with that time frame there. What's the top side? Well, obviously a lot. So, I started positioning some call strategies in more out to the summer and into the fall just to get over top of weather in case, there's a lot of things going on here because I'm looking at some value. And that's where we started working some of those strategies this week. But at the same time, we're still having those conversations, get a control on price bushels. And the one thing I've been telling guys, you get a price window that works for you, sell a chunk, not a little bit, get things moving. And then we can find ways to shift the risk around using the different tools that are available to you, whether it's through me, through the elevator, or whoever else.
I want to talk new crop in a second, but I want to ask about soybeans first. In terms of this soybean market right now, especially looking at front month contracts, are you concerned we have more downside risk in soybeans as well, John?
Very much so. The bean market still has me very, very nervous just because of the window and the time of year that we're dealing with here. If you go look at basis positions, what's available from the U.S. to the export market, what's available from Brazil to the export market, we're looking at a solid $1 to $1.25, $1.30 a bushel underneath U.S. prices coming out of Brazil. We saw the last 3 weeks of export sales dry up. We're starting to see some of those net reductions and things shifting around. Last week's export sales were dismal. And right now there's still room in this market for this thing to continue to fall. The technical picture, even with the couple pennies higher today, is still very negative in beans. And I still think we're in a spot here. We need to get through 60, 70% of harvest nationally in Brazil. That'll get us a little better idea where that crop is. But right now, even though supplies are, may not be as big as they are expected or were expected, there's still a lot of beans moving around down there. And until that kind of gets under control, I think our bean market's still going to be under pressure here. The crush expansion, everybody's counting on it. It's there, it's improving, but it's not coming fast enough to meet up for the export demand that's being lost. And that's going to keep that supply picture pretty heavy at this time frame. Maybe down the road. Again, I still think the South American weather, the reduced Brazil crop compared to, the market was thinking 165 back at the start of this. Now it's down to 145, 150. That's a lot of bushels that somewhere needs to get filled in. But realistically, that might turn into more of a summer-fall story. As all of a sudden Brazil starting to run out of exportable beans. The only game in town might be the United States, and that could give us a nice lift in the harvest window. So that's kind of the area I'm targeting call strategies over anybody that's made sales. Let's get the time, let's get the weather, let's get into the fall and see where this Brazilian crop really is.
And thinking too, looking at new crop East corn, kind of that 460 area, November beans, we'll call it 1130 area right now. I mean, thinking about 24's new crop. I know we have time here, but is it an area where some folks, if it pencils out right for them, maybe they need to get some floors in place here just to protect against any more downside potential on new crop sales, John?
Yeah, I agree with you totally. I'm watching this little bounce and made some communications with people today. Well, if we can get back 15 cents here, get back to 470, 475 area in December. Time to start moving a little bit. Take a look at the hedge to a rise. Maybe lock in the cash. Let's talk about put strategies. Again, I'm assuming normal weather until proven otherwise. And if we do come through and plant 91 million acres as USDA targeted, we'll see if that comes together by the time we get to June. But, we'll have to watch. And the weather is okay. Don't forget last year we had issues and we still had a strong production. So if the weather's good, that's going to put a lot of pressure on this market, especially come into a harvest low or a fall low. So to me, it's about let's put the floor in. Let's find a way to own the potential if the market were to take off due to the weather, but at least make sure we're securing a decent move that gets us some value. Okay. Again, we got to understand the difference between price and value here. Maybe it's not a great price, but in terms of dollars and cents, it's a bit of a value for to lock in some sales here and hope they are worse sales. But at least let's make sure we're protecting things on a price move here in this current market environment with the heavy supply picture that's forecasted to come at us.
John, how about that wheat market trade? Kansas City wheat kind of led us to the upside on the day Monday, and a fairly solid day across wheat trade. And I was looking for news to explain it. I heard a little chatter about weather concerns in the plains, but outside of that, I didn't see much. It just felt like a bit of a short covering type of rally, and money flow ended up being fairly good into the wheat markets on Monday. What's your thoughts?
Yeah, no, again, you go look at the KC chart today too. I'm looking at the March and the May contracts, and we're putting some double bottoms in here, and it was nice to see the prices rally off those lows. Again, another type of a reversal, a hook reversal or a key reversal on those charts. We've been kind of seeing that wheat market's really gotten a little volatile lately. We've had a couple good days, a couple really bad days. Sometimes that just tells you maybe people are getting ready to move out of that short position. So we'll have to watch. Obviously, we're talking nearly 70 degrees or 60 plus here tomorrow in Wisconsin. Places south of us are going to be warmer and drier. Maybe just, again, we throw a little premium into a market quickly. Then on top of that, then it's supposed to get bitter cold with heavy temperatures, kind of cold temperatures coming here by Wednesday for us. So again, the wheat market likes to try to kill off that winter wheat crop a couple times. So maybe there's some combination of fears going there that's just bringing some premium in. Don't think these markets have a lot of weather premium in them at all. Obviously, corn and soybeans have none right now at this time frame. If it does, I'm not sure why. Before we get into the planting window, so that could be maybe the reason there. Biggest thing though with wheat, especially the Chicago contracts, we're watching global wheat prices. Russia's still got another solid year of production coming. Their prices are underneath us on the global scale right now, and they're going to kind of drive that export market globally. That's still going to be a bit of a limiting factor, but at least maybe right now, if a problem does develop, this wheat market can at least get itself rounded out here with a bottom and maybe start grinding sideways to higher just because it can.
We're having a conversation today with John Heimberg from Total Farm Marketing. John, let's look at livestock, and let's start with cattle. Cattle on feed report Friday afternoon. Some saying a little negative in terms of the pre-report estimates. I know that placements number was a little bit hotter than people thought, and the on-feed number was up a little bit, 102%, but initially Monday morning we sold off and then quickly snapped the market back to kind of a mixed day. So it felt like overall a reaction to those cattle on feed numbers was fairly muted. John, what's your take?
Yeah, I felt like the report was fairly neutral overall, with the exception of that feeder number being a little bit higher in terms of the placements. And, the market reacted with a little bit of a, selling pressure there, triple digit losses, small ones at that, but still losses. But then the live market, let's start talking those fundamentals again. Cash trade was higher last week. Choice carcasses midday, 302 today. So again, we're seeing good demand. We're seeing those demand stay at these higher price levels. A $300 carcass puts a little more meat on the bone for the packer. So this cash trade trend higher this week. It feels like we got a little bit of animal spirits here too. I just do think there's some retail investors stepping into the cattle market. This is my own personal opinion, no proof of it, but they're reading the headlines. I saw it multiple times again. Cattle herd 73-year low. I mean, that's a good reason to buy cattle, in the long run of things. So I'm still friendly to this market and how it's at least handling things here. Still not over the top friendly. I like my call strategies that we're using, or we're owning the board. We make sure we got some protection in. But if I'm a producer, I'm also looking at this rally we've had since December. Make sure we keep that safety valve put play back in underneath this. We might hit a window where things all of a sudden do slow down. I am very concerned about the U.S. consumer and demand. We can see that start winding. I know the packers are slowing the chain, so carcass weights are coming up a little bit. That brings a little more production out there too in terms of pounds. Those things are things that we're going to have to keep an eye on going into the spring in this window. So again, keep those puts out there. I don't care if they go worthless and you're selling 180, 190, $200 cattle if we keep rallying. But boy, it'd be nice to know that I'd rather see a few bucks on the bottom side go worthless with unlimited upside with my cattle.
Well, also, John, since really last time we talked, we've continued to watch hogs pick up some of that friendly sentiment from cattle, I think, too. And we've got some $100 numbers on summer hogs out there. So maybe not as friendly I am in the hog market, but still, this has been a really, really solid rally here and a nice floor built into this hog market, it feels like, John.
Yeah, it has been. In the last couple of weeks, I know I've not been the most positive on the hog market. Still am not. I'm still concerned regarding the larger supplies, the pigs per litter that we saw in the last quarter of the hogs and pigs numbers. Those things are coming at us down the road here. So again, another window, make sure we're keeping those safety valve puts underneath this market, especially in those summer months. a little concerned about where we are on the global demand scale. We've had some really good weeks of pork sales and decent movement. Does that come to an end? But you got to acknowledge the things that are going on there. First off, cash index is trending nicely higher, picked up over $3 last week, higher again today to start the week. So we're seeing at least that trend. So the market's feeling a little more comfortable keeping those summer premiums in, even though I think that April contract, which, down 90 cents today on the close, looks a little bit toppy with that reversal and kind of drop back on prices from Friday. From Thursday. So we'll have to kind of watch how things are. Maybe we're getting a little long in the tooth here in this rally since it's been going since the first of the year now. That definitely a little more cautious to the downside if this market wants to roll over.
Well, John, let's wrap it up here today. Final thoughts from you. I know as well, end of the month coming in here, that could always add some extra layers of volatility in these markets. But overall, big picture, what do you want folks to think about and remember here as we're looking at this overall market sentiment and things they need to kind of keep in mind right now? John, what would you tell folks?
Just make sure you keep an eye on what, the numbers and the bottom line is in here. And, sometimes you got to be careful not to drink the Kool-Aid that all of a sudden we're running. I want to come diving into this thing hand over fist. The fundamentals, especially in the corn market and the soybean market, are still not friendly here. I'm hoping we get a nice price recovery, dead cat bounce, whatever term you want to put by it. Take advantage of it somehow. Make sure you're securing, again, those unsecured bushels in terms of price. Keep the short-term put strategies are not expensive right now. At least gives you some peace of mind, especially if you're also dealing with rolling these basis contracts over. Get a floor under it, because we could go through this again in May. If you go look at last year, we hit that same delivery period window in April on the May contract last year. We lost almost 50 cents again off that May price. So there's still carry in the market. There's still supplies that are heavy. Those things are all susceptible to pushing that price lower down the road. That's why you want to make sure you at least, again, take care of those unpriced bushels here on some form, whether it's just out of the money puts just to protect yourself. At least you got a little peace of mind if things do roll back over again.
John, if folks want to reach out to you and get some advice there at Total Farm Marketing, I know a few different ways to get in touch with you. How can they get a hold of you, John?
Give me a call, 800-334-9779. Shoot me an email, John H, totalfarmmarketing.com. And again, that website of ours, totalfarmmarketing.com.
John, great stuff. Always good to chat with you. Thanks for joining us here today on Market Talk. Appreciate it. We'll talk to you again next week.
Sounds good. Have a great week, everybody.
John Heinberg there with Total Farm Marketing. We're out of time here on the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.